Hi guys, welcome back to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. A brand new day and with some semblance of green and some semblance of normalcy returning to global markets. Of course, we have seen incessant selling across global markets, including Wall Street over the last 3 sessions, and a Black Monday, so to say, was averted on Wall Street yesterday. Of course, there were some rumors that President Trump may pause tariffs for 90 days except for China, and on that news, within a 15-minute window, we saw a vertical move when it comes to the US indices, sharply off session lows, and volumes were also fairly high. But what happened in the end was the fact that we saw a mixed close, sharply off session lows, and the Nasdaq managing to end in the positive zone today. Sharp recovery across Asia as well. The Nikkei was up over 6%. Remember yesterday the Nikkei did slip into the bear market territory. Hang Seng was also trading in the positive zone after trading was halted yesterday. 13% down sell off on Hang Seng yesterday. GIFT Nifty is indicating a 300-point pop-up for our markets. Dow futures, US futures are also trading pretty strong. So tariff storm has somewhat eased for now. You never really know which way the markets will swing if there is any kind of commentary coming in from Trump or any kind of news flow. But one positive news flow, and that too was a rumor, and that sent stocks, sent a very smart recovery across the global markets. So yes, let's see how things really pan out from here. But yes, all in all, it is expected to be a day of recovery on the markets. The Nifty could see a 300-point gap up open if all goes well, because the GIFT Nifty is of course hinting at that. And of course, lots of stocks in focus as fourth quarter updates trickle in. Remember, we have the earnings season also kicking off this week with TCS reporting numbers on Thursday. So yes, and Titan of course reported its fourth quarter updates, and the stock in the pre-open at least is showing good traction. So lots to watch out for. Also, your stock related queries will be taken up, so keep them coming in on a live feed. We'll try and get them addressed as well. Quickly take a look at the top stories at this hour. US futures are higher after volatile overnight session. Stocks see wild swings on hopes of some softening on the tariff front. Dow recovers over 2,500 points from lows, its largest swing ever. Nasdaq as well manages to eke out minor gains at close. Asian markets take cues from Wall Street as the Nikkei trades higher by 6%. The GIFT Nifty indicates a 300-point gap up for our markets as well. Oil prices rise over 1%, rebounding after a hefty sell-off on in recent sessions, led by concerns that US tariffs might depress demand and lead to a global recession. Meanwhile, gold prices also gain but continue to remain below the $3,000 mark. US President Donald Trump threatens to escalate tariff on China, says will impose another 50% levy from the 9th of April if China doesn't withdraw its retaliatory dues. In response, China's Commerce Ministry says it resolutely opposes Trump's threat and vowed to take countermeasures to safeguard its own rights and interests. And government increases excise duty on petrol and diesel by 2 rupees per litre effective today. The oil ministry has, however, confirmed that this will not lead to a rise in retail prices and consumers will remain unaffected. Prices of LPG cylinder will also be increased by 50 rupees across the country. That's what the oil ministry announced. All right, yesterday, of course, it was a day of big sell-off for our markets, but the big positive was the fact that over the last half an hour or 40 minutes, we saw a good recovery kicking in from day's low. The Nifty recovered 400 points from the day's low. Remember, at one point at the start, we had seen a 1,000-point cut on the Nifty. Of course, we have managed to end above the 22,100 mark. 21,964, that was the March 4th low, and the index managed to defend that. So yes, the street did or will take heart from that fact. And the Nifty Bank Index, that has been one pocket that has been outperforming in this route, also recovered 800 points from the day's low. overall we did recover. In fact, we did extend Friday's losses, but the fact that we cut some of those losses in the last hour, that provides some bit of comfort. Frontline indices, of course, did see cuts of 3 to 4% despite the last hour recovery. Sectoral indices, in fact, the metal index per se was down almost 7%. Market breadth, of course, it was in favor of declines. Metals, autos, IT, these were amongst the worst impacted, and they were down anywhere between 3 to 7%. But IT still managed to stage very good recovery from the day's low, and today as well IT will be in focus given the fact that the Nasdaq managed to end in the positive zone yesterday. The India VIX, that saw its biggest ever single day jump. It rose up by some 70% or so above the 21 level. So yes, that was something to take note of. Aside of that, if you look at the options queues, the put call ratio dropped to 0.72 vis-a-vis 0.74 in the previous session. Manappuram Finance enters the FNO ban list, and some of the other stocks that remain in FNO ban are the likes of Birlasoft and Hindustan Copper. The FI net sell figure was a little large yesterday, 9,000 crore rupees worth of stocks sold in the cash market, and the DI net buy figure was in fact topped 12,000 crores in the cash markets as well. But let's see, what are the kind of levels to really watch out for now that we have defended the 22,000 mark. Let's bring on board our guest for today. Joining me is Nirav, Chheda, AVP-Equity Derivatives and Technical Research Retail at Nirmal Bang. Nirav, lovely having you on the show here. Good recovery across global markets, and the good part is that we managed to defend 21,964 as well as 22,000. So today, given the fact that we are looking at a good bounce, what is the kind of level you'll be watching out for, and what would your strategy be?
Yeah, hi Nandita, thank you for having me again on this show. Basically, very important level for Nifty was that 21,950 or 22,000 levels, very important support level. Now, we did go down briefly, but a very smart recovery has been got. Also, along with the recovery, we've seen a closing around the 22,200 odd levels. Now, at the 22,000 put, yesterday we have seen a lot of put built up. That means a very good support level has been formed around this area. And if this breaks, you will see a bigger sell-off probably, which can take Nifty lower. But the good part is with this built up, you can expect a bounce. And with this bounce, probably it can be extended up to the 22,700, 22,800 odd levels. Add to that, the PCR is deep in the oversold zone around 0.7 odd levels, as you said. So that will also come up, which is a good thing as well. So all in all, at least for today, we expect a good bounce to come in, and probably Nifty can move up higher up to that 22,700, 22,800 levels, probably by day end or maybe in a couple of days. Even Bank Nifty, for that matter, very important support level for Bank Nifty was 49,000 levels. It defended the same. Also, 50-day moving average is placed around the same area, closed above the same as well. And looks like Bank Nifty is headed higher. This has been the stronger of the two indices. Even though Nifty has broken briefly below its previous low, Bank Nifty did not do that. Which is a good thing. Now, for Bank Nifty, the higher level is around 50,800 to 51,000 levels. That is where it is likely to move in. So, at open, if it is low, you can look to buy this stock, this index as well. A good support level is around 50,000. That can be your stop loss.
Okay, 50,000 will act as a stop loss on the Bank Nifty. But, just about 1 minute to go for the markets to open. Want to talk about any kind of strategy or stock strategy that you may have for our viewers, recommendations?
So basically, both buys today, and this is just for intraday. Cummins India is what I'm looking at to buy. You can buy the stock. See, everything is opening gap up, but if it does come down, you can buy this with a stop loss of around 2700. I expect this stock to come in at about 2820, 2850, so that will be your target. The second one is Tata Motors. Tata Motors is likely to move up to 650 odd levels, so buy at current levels, and on some declines your stop loss will be around 575.
Okay, Cummins and Tata Motors. Of course, Tata Motors has been hammered out of shape. But yes, a buy call coming in there for an intraday strategy. But look at the market. First ticks coming in, and yes, it is a 400-point gap up open as was being indicated by the GIFT Nifty. So yes, heave a sigh of relief because 22,500 is back on the charts, much to the relief of traders and investors. 1100 point or 1200 point up move on the Sensex, a good 2% uptick on the headline indices. So yes, some bit of normalcy returning. Even though, I would like to point out that, if you compare ourselves, Indian markets to the global markets, we have outperformed, and vis-a-vis a 13% fall on the Hang Seng yesterday, we managed to end the day with 3.5% kind of a fall. And today, of course, in tandem with the recovery across the global markets, we are also recovering. So yes, we are poised pretty well when it comes to the global markets. 2.5% recovery or uptick rather on the Nifty mid cap index. It's a 1240 point move. Bank Nifty as well, a good 600 point move. We are above that 50,500 mark. Advance decline ratio, at least at this juncture, firmly in favor of gainers. There are almost 2,000 advances on the NSE vis-a-vis a decline of 126 stocks. Let's take a look at some of the sectors and particularly the IT stocks as to what they are doing, because Nasdaq managed to end in the positive zone, came off sharply from session lows, managed to eke out slim gains. Yes, the IT pack is up almost 3%, IT index. Metal pack, which was hammered out of shape yesterday, 7% cut yesterday, and today it is witnessing a 3.5 to 4% kind of a recovery. The realty pack was also beaten down yesterday. Today a good 3.5% uptick there as well. So all in all the sectors rather are trading in the positive zone. Autos as well seeing a good 2.5% recovery. Pharma as well, although the pharma pack is underperforming if you compare it to other sectors, a 1.2% gain on the pharma pack. The oil and gas pack is also upbeat, a 2% uptick coming in there as well. But in terms of individual movers, want to see which are the top gainers. In fact, right now on the Nifty, all the 50 stocks are in the positive zone. That's a good contrast from yesterday when HUL was the only gainer on the index. Titan leading from the front, 5.5% gains, and the top Nifty gainer on the back of strong fourth quarter update. Bharat Electronics has bagged an order from the Indian Air Force, 5% up move there as well. All the beaten down metal names are in the green today. Tata Steel, JSW Steel, these were some of the names, remember, that were beaten black and blue in yesterday's session. Tata Motors as well, flirting with the 600 mark as we speak. It's a good 3% uptick. Adani Ports, Hindalco, Infosys, Axis Bank, Bajaj Finserv, these are some of the other movers, and SBI as well on the back of an upgrade from Goldman Sachs. SBI is also trading in the green. Of course, as I said, all the stocks on the Nifty 50 are trading in the green, but HDFC Bank is at the bottom of the heap, so to say, just about 0.5% gain on this counter. And some of the consumer names that were holding out yesterday are seeing moderate to mild gains today, underperforming, so to say. But yes, Titan and BEL, these are the two top names on the Nifty. Talking about Titan, Nirav, update is fourth quarter update is pretty strong. The jewelry business, the domestic business up 24% on the back of significant increase in gold prices. Even in emerging businesses, the fragrances business clocked a growth of 26% on a YY basis. Carrot Lane also grew 22%, driven by healthy growth in the studded portfolio. And, it is a pretty strong update, so to say, for Titan. 25% standalone business growth on a YY basis. The stock is somewhere around 3,200 or so, 5% uptick. Any thoughts here on the upside? What are the kind of levels you'll be really watching out for on the charts of a Titan?
See, for Titan, if you see the last 6 months or so, this is making a lower top, lower bottom formation with 50-day moving average being the resistance zone. It briefly breaks the 50-day moving average and then again comes in. So now, as we are talking, the stock has broken the 50-day moving average and has host of resistances around, 3250, 3300 levels. I would only suggest that if you bought yesterday at lower levels, this is a good time to book some profits in Titan. There is a likelihood that this stock will probably consolidate for a bit in between 3250 to 3300 levels and then again come down.
Okay, good time to book profits on a Titan. If any of you may have a query, that's what you need to do now. Book some profits on a Titan. But BEL, second top performer on the Nifty 50. I think it's up 5% or so. And interesting fact is that over the last 5 sessions, the stock has given positive returns, 0.5% or so. There is news flow. The company has bagged orders worth 2,200 crore rupees, from the Indian Air Force. It has also signed contracts worth 2,385 crore rupees for the Air Force for modification for Mi-17 V5 helicopters, and with this the accumulated orders for the company totals 2,800 crore rupees for the current financial year. But for FY25, the company missed its order inflow guidance. Given the fact that defense stocks have been holding strong, they have seen renewed traction of buying interest. BEL, would you be a buyer on this? It's at 283. Still some time to go if it has to really retest those 52-week highs. They have seen quite a bit of correction, of course. But would you play the stock for 310, 315 kind of levels now?
See, basically, at this point, you've got to look at the larger trend. If you see in the last 4 years, from 20 odd level, the stock has moved up to 300 odd, and that is more than 10x returns. So definitely, after such a return, some consolidation has to come in, which is what we are seeing in the last 3-4 months in this stock. This is making a lower top, lower bottom formation as well, and the top is around that 295, 300 odd levels, the lower one, and in all likelihood, it has hit the upper band. There is a likelihood that this stock will hit the lower band, which is around that 250 odd levels. So at this point, probably, if you want to buy for intraday purpose, yes, you can buy with a 10 rupee target. But if you look at 4-5 day perspective, it is not a buy. So I would like to avoid this counter at this point of time. I'll be looking to buy around 250 odd.
Okay, avoid this counter and of course looking to buy 250 odd. That's the call on a BEL. But before I move on to queries, want your thoughts on a trend. The stock is limping back after a 15% cut yesterday. Has there been a major breakdown on charts? Is this stock vulnerable to more sell off? If yes, what is the floor one should be looking at here on trend?
Yeah. So, see, basically, this stock witnessed 15 odd % decline yesterday. But obviously, it has broken below its previous low as well. But it has very good support on around 4,500 levels. And from there, it witnessed a bounce. I expect this bounce to continue upwards towards that 51, 5,200 levels. So if you bought, that would be a good level to book some profits. But at this point, looks like there is still some reasonable upside left in trend from a near-term perspective. So look to buy the stock at current levels. You can keep a stop loss of around 4,600 for your longs, and 5,100 to 5,200 is where you look to book profits.
Okay, that's the view on trend then. Let's shift focus to some viewer queries that are trickling in then. First one coming in from Naveen on a Zomato. Yesterday when stocks were really taking a beating, some of these consumption names managed to show resilience and Zomato was one of them. Today as well, the stock is up somewhere around 2%. It's at 213. Of course, if you compare it with 52-week highs, it has come off quite a bit and a lot of concerns when it comes to competition and the likes in the quick commerce space. But over the last 5 days, the stock has given a 5.5% positive return. Are these good levels to buy? And if somebody holds, what should the strategy be?
Yeah, this looks like a good level to buy. This stock has consolidated for quite a bit at this level, and there is all like in all likelihood, this stock will move up towards 225 to 30 levels. So yeah, you can look to buy from a near-term perspective with that target of around 230. 208 is what you should look at as your stop loss.
Okay, 208, a good stop loss on a Zomato. Hope that answers your query. Want to take up a query on the cables and wires stocks coming in from Pannu Anil. What's your thoughts on Polycab and Finolex cables? We've seen these stocks come under intense selling pressure on the back of competition concerns. If you look at the last 6 months for a Polycab, it's down somewhere around 30%. Polycab is largely known as a mid-cap poster boy, right? At 5,000 odd, would you recommend this stock, or would you say that, there's still some bit of uncertainty in terms of competition in the sector, so, avoid this particular pocket at the current juncture? What would your thoughts really be?
I would like to avoid basically both these stocks, FinCable and Polycab, have witnessed considerable upside from 2020 onwards, and post that they've made a top kind of a formation. They've fallen as well. Now, briefly, FinCables has witnessed very good buying, but then from 800 went to 1000 and again back again down. I believe FinCables can come down again up to that 750, 720 odd band. So look to avoid this counter. Even for Polycab, there's a double top kind of a formation around 7500 levels, which is not very good. This stock can also probably come down towards 3950 for 4000 odd levels. So there is still a considerable downside left for both stocks. So I would like to avoid this both these counters at this point. Probably in the next month or so, when they make their lows, is when you can look to buy.
Okay, that's the view. Hope that answers your query, Pannu Anil. Uh, want to take up a query then from Debu K. This one is on HPCL. Of course, after the excise duty hike and LPG hike announcements yesterday, all these OMCs, came off their day's highs. Today, just want to see what HPCL is doing. It's up 1.5%. BPCL is up 2.5%. So yes, they have recovered. But on the charts, how are you viewing these stocks now, OMCs, after a good correction from 52-week highs?
Yes, so anyone who's looking to have defensive bets in their portfolio should look at buying OMCs at this point. Looking at the charts, they seem to be poised to move up quite a bit from current levels. The top pick would be HPCL. This stock can move up towards 425, 430 odd levels. Even IOC can, for that matter, move towards 160, 65 odd levels. Downside is minimal for these stocks, so look to buy these stocks as a hedge for your portfolio.
Okay, you can look to buy some of these OMCs. Hope that answers your query, Debu K. Satya CK wants to know whether one should look at capital good names like Siemens, ABB for fresh longs. Any thoughts here on the capital goods? I think yesterday the capital goods index also saw a fair bit of sell-off.
Yeah, for capital goods, if you're looking for a couple of days trade, then yes, you can look at Cummins India and ABB. ABB has made a very good low around the 4600 odd levels. That is a very strong support area. Possibly this stock can come up towards 5400 odd levels. And Cummins, I already told you, to buy. Even this stock looks good, looks set to move up towards 3000 odd levels. So these are the two stocks probably you can look for a couple of days trade.
Okay, that's the view then. But let's take up another query then. There's a query that has come in on Titan. I think we've already discussed that. Maybe you can go back in the feed and check what Nirav really had to say about Titan. Okay, Shweta Naidu wants to know among PG, Electroplast, Keynes, and Amber, which one is a good stock to enter at current levels? I think Keynes was up somewhere around 5%. I had checked a few minutes ago. Any of these stocks that are catching your fancy now?
See, basically, out of all these stocks, I like Keynes, even though it is up. This is one stock I like because the overall trend continues to be positive. This stock continues to move in a higher bottom formation, while all others have broken below some, the previous lows. This stock hasn't done the same. So Keynes can probably move up towards, 5,500 to 6,000 levels in the medium term. The others I'm not very sure of because I do see some top formation coming in.
Okay, that's the view then. There's a query that has come in from Chipulla, and he wants to know, can I buy pharma Bs or IT Bs in the current scenario? Would you suggest?
I would suggest, out of two, if you have only two choices, then ITPs would be a better option because they've already fallen, from 49 odd to 35. That's a considerable downside. While Pharma Bs hasn't really done much from 24 to 20 only. This still has some downside left, Pharma. So, better off buy ITBs, and if there is a fall in the next 3 months, again buy ITBs after 3 months. So that will average out, and then you can probably gain a lot.
Okay, that's the view then. Hope that answers your query. One more query I want to take up on a Brain Bee Solutions. This one's coming in from Satvika. The stock is, of course, below its IPO price of 465. It has shaved off, half of its gains or half of its value in the last 6 months. You may not have a lot of data on this, but if you've tracked this stock, any thoughts here? Brain Bee Solutions?
No, this is fairly new, so not much data. So I won't be able to give any support or resistance at this point.
Sure. Can you share your thoughts on metals? Some of these names have really been beaten black and blue. The likes of Hindalco, Tata Steel, etc. What are your thoughts, and how should one really navigate the metal pocket now? Would you stay away given the volatility, or would you say that there are trades for short term that you could look at when it comes to the metal space?
No, actually, I'll stay away because most of these names have broken below important support levels. Now, for that matter, Vedanta, or Tata Steel, or SAIL, or Hindalco as well. They were, trading in a higher bottom formation, and now they've broken below the same. So they've started a negative or a bearish trend, and there is a likelihood these stocks will still come off, and they'll come down for the next 3-4 months, in all likelihood. So I'll stay away at this point.
Okay, stay away from the metal pack. But with that, we've come to the end of the query segment, and Nirav would like to thank you for taking out time and joining in this morning and sharing your thoughts with us, your strategies with us, and of course helping our viewers in navigating their stock holdings as well. Look forward to our next conversation as well. Have a good trading day.
Thank you. Thank you.
Thanks a lot. Well, on that note, let's quickly take a look at what the markets are really doing at the current juncture. Yes, we are where we were, 22,500. Nothing really to complain about this morning at least. It's a good 400 point up move on the Nifty. Almost a 2% or 1.7% gain. And for the Sensex, it's a good 1200 point up move. The broader end of the markets also participating in the recovery. The mid cap index is up by 2%. Bank Nifty showing good traction as well. 50,740 is where the Bank Nifty is at, and the advanced decline ratio extremely strong. And we just have one laggard on the Nifty, that's TCS, that reports numbers on the 10th. But aside of that, Titan, the clear winner in today's session. But to understand how to navigate the market now in the face of so much volatility and so much developments on the global front, let's bring on board our next guest for today. Joining me is Prateek Agrawal, CEO Motilal Oswal AMC. Prateek, lovely having you here. Market
Thank
participants
you.
are divided when it comes to the mood, right? Between optimism, caution, and most participants are also unsure if the markets have really bottomed out after the kind of sell-off we've seen over the last 2 days. What are your thoughts? And would you be looking to deploy money in this, market, or would you say that it's a good time to just sit on the sidelines, sit on cash, and ride out the global storm that's taken, in fact, the global markets by storm?
Yeah, so these are times to our mind when the economy and the sentiments are two different things. The markets are two different things. Economy hasn't gotten impacted. For all you know, the net result of whatever is happening globally at the first level, there will be second, third, fourth level, depending on how long this thing continues. But the first level, maybe net positive because our exports to US is 80 billion, 10% margin on that, meaning 8 billion kind of impact on GDP. On the other side, you have got 10, $15 billion benefit from a drop in crude prices. So net all GDP hasn't got a negative impact. It may have got a positive impact. Most businesses which are
Hmm.
significant in the market also tell us of a positive outlook because the competitiveness versus the other countries, other producing countries has improved as a consequence of whatever the US has done. And today they are seeing some positivity, inquiries, etc., from the buyers. But that is level one. Now there will be response of these countries. Let's see how it behaves. There is also a US slowdown that may happen because of increased prices. So all of those second, third level impact one has to see. Now, the point is, while the
Hmm.
economy is not doing badly, the markets are more linked because there is this global money that flushes around in every market, and two, because of whatever is happening, the Indian retail investor, would probably find it difficult to sustain confidence. It's just too much of
Hmm.
news, it's just too much of volatility in the market, and that is what is creating
Hmm.
the negativity that we have seen over the past few days. Now, and hence you will get these kind of days. A lot of it could be short covering kind of stuff. Fundamentals haven't gotten
Hmm.
destroyed, valuations are lower, some small positivity, you get a flare up in the market. We have to get a few steady days to say that it is now behind us. Sentiment is the key. One should get people to understand that Indian economy, Indian businesses are looking at whatever is happening with a lot of promise rather than with fear.
Sure, point taken, of course, and going by the kind of tariff that has been imposed on other economies or other countries, a lot of experts are of the view that India is much better placed. But of course, there are sectors that won't be insulated, the likes of autos, IT, even pharma for that matter, and metals have been impacted. So, what are your sectoral, or where are your sectoral preferences leaning right now, Prateek?
Yeah, no, so understand who we are. We are growth investors. We want to find
Hmm.
spaces in the market where growth in earnings can sustain at levels significantly higher than the index for several years. Okay, and if you see lot of those, then spaces tend to be domestic focused. For example, electronic manufacturing, which has got policy tailwind, renewables, again some policy tailwinds, global tailwinds as well, maybe luxury consumption. If interest rates go down, then everything which is interest rate sensitive should benefit, like NBFCs, like real estate, maybe even autos. If energy goes down, like oil has gone down, everything domestic which uses energy as an input would benefit. While we don't have cement in the house, cement benefits. Autos will again look at benefiting a tad. If airlines will benefit, inflation number will be lower. So again, sentiment benefits. FMCG has a big link to oil as well. So FMCG has a pack
Hmm.
benefits while we don't have FMCG and so on. So domestic businesses with policy tailwinds where growth is higher is where we are focused, and many of those are actually benefiting
Hmm.
from whatever is happening, and others are not getting impacted plus or minus. So renewables, for example, with whatever is happening globally, are not getting impacted. They are completely India specific businesses. Stock prices are different matter. Stock prices, the sentiment of
Hmm.
the day, liquidity constraints, etc., may cause stocks to behave differently.
Sure. Since you're talking about oil, I want to get in your call on OMCs as well. With the government raising LPG prices by 50 rupees to offset future under recoveries, OMCs still face a 2 rupee hike on petrol and diesel due to the excise duty hike, which of course will not be passed on to the consumers. How do you see this combination impacting their earnings trajectory, and what exactly is your call when it comes to the OMC basket?
Also, we as a house have zero exposure there because, like I said, we
Hmm.
look at growth in earnings sustaining for several years. So OMCs are very, very, quarter specific. Oil prices drop, they haven't passed on the benefit. You make more money. Next quarter, they pass on the benefit, they make less money, and so on. And in between, government taxation can also come in to absorb some of the benefit. So we kind of stay away from this pack. So, metal mining, oil refining, all of these spaces we think will grow less than the economy, less than the
Hmm.
earnings growth of the index itself. And these are spaces you shall not find in our house.
Sure. Point taken, but I'm afraid, Prateek, we are slightly short on time today. I look forward to having a longer conversation with you sometime soon. Would like to thank you for taking out time and joining in and sharing your thoughts with
Thanks.
us. I look forward to our next chat, in the coming days as well.
Sure.
Thank you, Prateek. Thanks a lot. Well, on that note, some bit of green on the screen, and heaving a sigh of relief after a drubbing that saw global markets shave off quite a bit over the last three sessions. A 300-point up move on the Nifty, although we've come off slightly from the day's highs or opening highs, but still nothing really to complain about. Let's hope this momentum continues as we progress through the day. But for now, it's a goodbye from me. Thanks a lot for tuning into Opening Bell. Stay tuned to Money Control for all your other news and updates, and I'll see you, back at 12 p.m. With Lata Venkatesh on what to expect from the RBI policy this time around. Of course, the MPC meet outcome will be coming out tomorrow, so don't forget to log in for that as well. But for now, thanks a lot for tuning in from the entire team. Have a great trading day.